Hey guys, welcome back to the channel. Today we're going to talk about when to sell your penny stocks. Now this is a complex subject because penny stocks are very volatile, of course, and you can go from being hundreds of percent up to being break even or in a massive loss very quickly indeed. So today we're going to talk about some rules and tips to abide by if you want to be profitable when trading or investing in penny stocks. If that sounds like something you're interested in, please smash that like button, consider subscribing to my channel, and I'll catch you in there to have a chat about this. Hey guys, welcome into the video. So the first question we are asking is, are you penny stock trading or are you investing? Because that will tweak your strategy slightly. Are you going to be in this company for the long term? Are you in it for just a few months, a few weeks, a couple of days? If you're in it for any less than a day or a couple of days, then you are definitely day trading. Trading is extensively intensive. You'll require a lot of time to research in these companies and watching to sell your investment at the opportune time. They require near constant monitoring live. Investing, even in the short term, over a few weeks or months, is less intensive, but you still need to be monitoring these companies' news feeds all the time and stay ahead of what's going on in that company's sector and what's going on in the market as a whole. The only exception to this is if you believe in the long-term potential of this company over many months or years and you're getting in, and therefore it doesn't really matter so much. I assume that you are going to do lots and lots of research to be a long-term investor. Next up is, don't be greedy, guys. If you've made yourself a nice tidy 300% profit, then don't put this at risk to make to make even more money. And you should certainly not average up in the company unless you are super confident and your research suggests that it's going to return you even more money. Because if you know how volatile these stocks are, you could easily lose that 300% and come down to less than 100%, come down to break even or be at a loss very quickly. So if you've made a really good multi-bag return, then consider selling and just move on. There's plenty of other stocks out there. The next thing to talk about is have a strategy. Now this cannot be stressed with investing as a whole, but it is particularly important with penny stocks. You need to have a target return, profit or percentage gain that you want to exit at and stick to it. A little bit of leeway either side, a few extra points or whatever if you are watching the stock like a hawk, maybe that's okay, but consider essentially setting a selling point, sticking to it, cashing out and ensure yourself a nice juicy profit rather than extending your risk by averaging up. Take a maximum profit, move it to a new target, and you can remake money all over again. Please don't fall for the hype or the pump stocks. You need to be, if you're going to do this, you need to again be super confident on them, watching them like hawks, and just ride the way up and get out as quick as you can. Make short, sharp profits on the way, because these are extremely common. They're crowd funded. Everybody acts like sheep and jumps into them, but do your own research. Don't just dive in because it is 50-100% up in a day. You need to have a look yourself. If you do end up in a company that does get pumped and dumped, just sell, take your profits, unless you're very confident in the long-term future. But a lot of these companies aren't like that at all. If you happen to be in a company that gets pumped, ride the profit up and get out and move your money off elsewhere. There's a nice handy investing approach that works, especially in shorter term investing, and that is the hit and run approach. So you buy in at a place where you expect other investors, thousands of other investors, to enter. These entries are based on a support and resistance pattern, so you're going to get in where it's at its bottom base level, and sometimes you might have to be patient and wait a lot longer. It could be weeks while this support pattern builds and while the base is established, but then a piece of news will send this stock flying. Once you're in profit, I'd consider selling half the position to manage some risk and adjust your stop loss to a break even for the rest of it. That way you guarantee yourself at least a small profit, and that's what this is all about. You get a minimum of a small winner literally every single time. Occasionally you'll end up on a penny stock that goes to the moon, so to speak, and this is absolutely brilliant. It's a multi-bagger, but it should be seen as a boon. Not every company that you invest in is going to do this. What it's more about is consistently taking a profit from every company you invest in. That is a far better way rather than having 10 losers and 1 winner. Moving on from this, as I said, consistency is key. Making 50 to 100% on every single investment, occasionally making one that goes up 400%, 500%, even 1000% is brilliant, rather than finding one home run stock but investing in 20 losers on the way, which will lose you money. The research for this is painstaking, it's hard, it's going to take a lot of your time, but it is worth it and it won't let you down more often than not. If you are in any doubt about a penny stock company, then just don't invest. Simple. There's so many other options out there. Just be patient and hold on to your capital, hold on to your dry powder and move it on elsewhere. Why are you selling your penny stock? Take a pause. Always recommend doing this before you hit the sell button. Now, I don't mean to rush into things. You should never rush into selling any investment, but just take a pause, take a breath and ask yourself why you're selling. Have you met your price target, made enough profit, or has there been a massive fundamental change in the company? Absolutely sell. If the company is getting a ton of bad press and it's going to make the share price tank, get out of it. If none of these are happening, then why are you selling? Is it not moving quick enough? You just have to consider certain things. Otherwise, you might sell just before the price bounces up and takes off. So do be careful when you are selling. But equally, if you're in profit, by all means take the money and run to another investment. This moves us on nicely to managing your risk. Manage your exposure to just how many penny stocks that you have and their sectors, because if one sector gets walloped by essentially a big news item, a black swan event or anything like that, then all of your penny stocks in that sector, as well as normal stocks that are in that sector as well, the ones that are listed on the Nasdaq and the New York Stock Exchange, they're going to get punched and punched hard. And if your whole portfolio of penny stocks is in that sector, you're going to get a serious tanking in your portfolio. So do be aware of some diversification across even your penny stock investing, just to make sure that you're not exposed to too much risk. Buying more in any company will decrease your profit and increase risk. Averaging down in penny stocks isn't recommended, because you could essentially end up chasing a falling knife. It is sometimes better just to cut your losses and get out. The same as averaging up as well. You should only be averaging up if you're super confident too. So manage your risk. It's always better to take a small loss rather than chuck all your money in trying to chase a falling knife to the bottom and then the share price never actually recovers. Always be careful about that, guys. You will have to monitor penny stock positions very closely indeed, guys. That cannot be stressed enough. You have to watch them closely, even more particular if you're day trading or investing over a short-term period. This is not recommended. Most people do this probably too much anyway. I mean, app-based investing now means that you can check up on your stocks almost every second of every day if you so wish. That is not recommended with dividend investing or growth stock investing, but with penny stocks it's always good to check in and monitor the company news, just in case you can ditch the company in case something really bad happens, and you can take advantage of a share price spike. If it's gone up massively, you can get out at a good point. Penny stocks are very volatile. If in doubt and you're in profit or break even, then definitely sell. If you're already taking a loss, consider cutting your losses and getting out as well before that loss extends. At the very minimum, you should be reassessing your investment, and you should only be averaging down if you're absolutely confident in the company, because this is full of risk. By following these easy and simple rules, you can mitigate some of your risk in penny stock investing and know exactly when to sell your penny stocks, or at least know when the rules don't apply to you, or you're going to ignore the rules at this point for whatever reason you have. But bear in mind, penny stock investing is very risk intensive, it is time consuming, it isn't for everybody. If you don't like the volatility, you don't like committing the time to doing the research and whatever, then get involved in the dividend stock side of things or growth stock side of things, which is a little bit more relaxed and easier and more forgiving if you get it wrong. So hopefully you've enjoyed this investing episode today, guys. We've talked about some great how to sell your penny stocks rules. And hopefully, if this video has brought you some value, you're going to smash that like button for me on the way out. Catch you later.